Hi, I'm Yasmin Dahya Bilger, and I'm the head of the ETF business here at Engine Number One, where I oversee our client, platform, and product strategy for our ETF business. The goal of the Engine Number One Transform Climate ETF, or NETZ, is to invest in the companies that will drive and benefit from the energy transition. This includes companies across industries that have clear strategy to create value on a path to net zero carbon emissions. With this fund, we're flipping the whole conversation of climate on its head. By some estimates, it will take between $4 to $5 trillion of investments per year for us to meet net zero targets. This is a huge investment opportunity. And the real question is, where is the value within that investment opportunity? Our point of view is that fewer than 200 companies account for over 80% of corporate industrial greenhouse gas emissions. There is no path to net zero that doesn't go directly through those companies. In terms of what we're trying to deliver for investors, it's really alpha and impact. And we actually think that those two goals are in alignment with each other. We think that there's tremendous shareholder value to unlock with traditional incumbents leveraging their scale and competitive advantages. And we also think it's our role as active owners to help them on that path towards net zero. So the vast majority of climate strategies are really built on the concept of divestment, which is to say a good climate strategy is one that fully excludes or leans away from the highest emitting companies and the highest emitting sectors in our economy. As a result of that, most climate strategies tend to be underweight places like oil and gas and overweight parts of our economy like technology. We take a completely different point of view as an engagement focused firm. 75% of global greenhouse gas emissions comes from just three parts of our economy: energy, agriculture, and transportation. This is the heart of the energy transition. And this is where we believe there's opportunities to find both impact at scale as well as unlocking tremendous shareholder value. We're looking for the companies that have a long-term strategy to decarbonize, management teams that are committed to decarbonization, and are making the short and medium-term investments today to show that they're on that path. And so our portfolio is comprised of companies in those very sectors. Said differently, most climate strategies are optimizing for green today, while we with NETZ are really optimizing for the transformation from brown to green and the impact and investment opportunities that sit around that. We see an NETZ for a wide range of investors, but I'll focus on two use cases that we've seen. The first is really catalyzing change at scale. We go where the emissions are with NETZ. And if there's any chance for us to reduce emissions at scale this decade, it's going to be through the investment and engagement with the largest emitting companies and sectors in our economy. The second is about value creation. Environmental issues are investing issues, and we see tremendous amount of shareholder value that can be unlocked by finding the companies that can navigate the complexity that many of these high emitting sectors are facing right now. In terms of role in a portfolio, NETZ is meant to be a satellite within someone's portfolio, a place to really drive out performance. And most portfolios right now are actually heavily skewed towards growth. So what we've seen from many investors is that NETZ has been a diversifying and complementary exposure within portfolios right now.